the Trailblazing on sustainability reporting for business impact. The reason we have put this webinar up is that some of our board colleagues, including some of our boards that we also have in different facets, have kind of got to be a bit not understanding where they are in terms of their roles now when the legislation, especially in Europe, is coming in. So we wanted to take an opportunity to discuss that with you all. And we're delighted to have a very knowledgeable panel with two experts and two board members that will join us and partly present and partly discuss. We will also have Kim and Tatiana helping out in the chat. You're all welcome to actually add in the chat where you're calling in from. And of course, you can also add questions, you can add insights in there. This is the agenda. I'll do a quick introduction. Then we are fortunate to have Jane Thostrup Jagd that will talk to us about Trailblazing sustainability reporting. I will introduce her in a moment. After that, we will have help by David Friedlinger to put us into a bit bigger of the map that we need to consider as board members, and then we'll have a panel discussion. After that, it's your turn. You will answer a poll that is anonymous, and then we will have discussions in breakout rooms. Coming back with some feedback on that, we will ask the panel to comment and share their experiences. And we're going to be here until 2. Etiquette, you are mostly muted. If not, please mute yourself. The chat box is open, and Kim and Tatiana will be the one that is helping out monitoring that. The first part of this is being recorded, and that part we will use. We will also create some insights from our discussions. In everything that's discussed in breakout rooms will not be recorded. So that is very a safe haven. And everything that people say that's related to persons or companies is under Chatham rules. So take from all of the learning, but don't share that in that company they're doing this or that. I just want to take the opportunity to remind everybody that around the governance for us as board members, this is a fantastic framework you can use that was created by World Economic Forum and that we keep using. And one of the reasons we're using it is that it helps boards to kind of remember where to look if we are not structured or approaching things enough in a good way. And one of the things that happen when new topics come in is that we usually as board members dive directly into it. So we look at the risk and opportunities, but we actually forget to discuss what's our role. Are we competent on this? Do we need to have education? Do we need to do things? So it's a structure for us, and it's available over our website. It's a really good tool. Today, we're going to focus on the linkage back from reporting and linkage from the strategy and strategic guidance that we are obliged to give as a board. Now, Dr. Jane Thostrup Jagd. She's a director with Women Business Coalition, and she has a background from several of the large Nordic customers, where she's worked with the topic of both getting the company to become more sustainable, but also helping the company to report on that. She's a member of a range of working groups, and she's going to, in a very speedy fashion, help us to get an overview of the the situation, but also some of the challenges, and therefore also some of the opportunities that she has found that boards needs to consider. And she's also authored a report covering solutions from the early adopters, and we will share that in the communication from this webinar. Jane, warm welcome.
Thank you so much. Well, next slide. In this super short presentation, I will introduce you to actually a plethora of regulations and standards around the world, just so that you know you are not the only ones who are meeting all these requirements. Then I will briefly touch upon CSRD, who is it and when. Then I will tell you a bit about this report that we have made where we have 75 different solution suggestions. And I have picked out two topics, and one is the double materiality assessment, and the other one is called TCFD. I will come back to what that is. And then lately we will talk about assurance or audit. Next slide. The first thing I want to show you is the plethora of regulations. So if you feel overwhelmed in the boat, I fully understand it. But I would also like to maintain that you are not the only ones. It is also outside of EU. We actually see right now that more than 20 jurisdictions have adopted or will adopt, for instance, the ISSB, the sister of IFRS. We have seen California, for instance, they have made their own rules now that the US SEC have been stalling, so to speak. And then, of course, within the EU, we have this range of different regulations, and they are intertwined, I can promise you. So there is the entire Green Deal with all the bits and bobs which works together in various ways. Next slide. One of the things which are very, very important for the for the companies to know about is taxonomy reporting. It is the sister to CSRD, and it's very, very often forgotten, simply because it's smaller, but it is very, very important. It is important for the investors because this is a way of identifying companies on their way. Especially, they use it to identify which companies have made green capital expenditures, because they can see that in the taxonomy reporting. And I know that many investors actually use the taxonomy reporting to go what you could call beyond all the nice words, the commitments, the targets, to see, do they then do anything, or is it just talk? So taxonomy is important, and do also notice that there are taxonomies in many other countries, especially, which is very interesting, in Muslim countries. So many taxonomies to be aware of are there, and they can especially be used to raise capital via green bonds. So consider that. Next slide. This is just an overview. The reason why I've included this is if you are in listed companies, you are I'm pretty sure you know that the CSRD will hit you now from reporting year 24. What we tend to forget to talk about, but maybe way more important and way more complicated, is all the large unlisted companies. They will be covered in what we call wave 2. And unfortunately, are many of these companies not very prepared, because many of them have not done NFRD reporting, and many of them also still have their sustainability, if they have a sustainability department, placed somewhere in communication or placed somewhere really interesting. And that is a problem now. So they will have to consider if that should be reorganized. Next slide. So with all this new CSRD reporting coming, we, in the organization I'm part of, we work with more than 17,000 companies. So we hear a lot, I can tell you. And one of the questions we got all the time was, what should it look like? What should it be like? And thankfully, we also knew there were some companies who had upfront made some trials to make CSRD aligned reporting. I will not claim that it's 100% aligned, because it is not. But these companies that we have included in this report, and I've included a link to it here, are super interesting because we have only included the bits and bobs we have not really seen before. So it's only the interesting reporting parts that we have included. So, but it's not plug and play, it is for inspiration. Next slide. The first topic I will cover, and there are many topics in the report I should mention, but this is just, I've only included 2 here, is the double materiality assessment. And the reason why I've included it is DMA, as it's short name for it, is the cornerstone of the CSRD. Because actually, CSRD only have 2 mandatory standards, 1 and 2. But all the 10 topical standards, they are not mandatory. They are subject to the materiality assessment. And in this case, double materiality assessment, which is special for Europe, but actually also China. So double materiality is very important to understand. The classic format for a DMA will be that you have, for instance, the impact from the outside on the company. That is the classic, also the financial way we see risk and opportunities. That is how we see outside world impacting on the company. That is on the x-axis in a traditional diagram. And on the y-axis, you would have the company's impact on the society and nature and whatever you have. So that's the inside and out view. And when you combine these, you get the double materiality assessment. Next slide. Here you see an example of a very, very classic DMA, which is from H+H. And you can see here the X and Y axis, as I mentioned. But what you also can see, or at least sense, is that it very, very, very easily becomes very cluttered. And what we also see, and you will see examples of that in the report, is that many of these DMA assessments, they are actually turned into lists or tables because there are so much information you need to provide. So these beautiful and pretty overviews are potentially not the best in the future. Next slide. Another thing that I would like to mention about DMA is that we can see that they, at least currently, or at least in 23, they were not necessarily super integrated with the strategy. And that is odd, because that is the cornerstone of the entire legislation. But what I saw several times was actually that we could see that in the DMA, for instance, they claim climate is super important, also for the company. And then when you go and look into the chapter of the enterprise risk management, it was not mentioned at all. And then you are like, is it important or is it not? And the investor, at least, will consider this to be pretty odd. And they will probably also ask questions. So consider this, that there have to be this coherence in the reporting. And that will, of course, also require that the strategy is anchored and the DMA is anchored in the strategy so that you have all this information in a nice, coherent way. As I mentioned, to be able to do this will, at least for many companies, still require some sort of reorganization. It doesn't work that the sustainability department is some island over here who is not really integrated in the company, and especially do not work with financial people. That does not work in the future. And this also goes for large non-listed companies. That will also have to change there. Next slide. The second and last topic I have chosen to show you today is TCFD. TCFD is actually very old. It's from 2017. And at that time, the intention was from Michael Bloomberg and others was to indicate that what is important for the investor is actually to know what will be the impact from climate change on the company. And what they did was that they actually indicated that they need to know, the investor need to know what is the risk, of course, but also the opportunities. And they needed to be quantified and they needed to be monetized. What we have seen is that the TCFD reporting over the years has been very good at explaining about policies and all the nice and fluffy things, but very, very rarely do we see it being quantified and monetized. I have today only included once, but I have one of these examples I've seen where a company has actually tried to monetize it, and I've included more examples in the report. But it is still rare, and it is still something that the company should be much, much, much better at. And perhaps this will require also this connection with the enterprise risk management, because they have a tendency also to monetize things, to evaluate, is this really important or is it not? So next slide. Here I have included an example from Mondi, which is actually a UK-based company with some connections also to South Africa. And you may ask, why do they do CSRD reporting? They are not covered. Well, they will be in the second wave. So they have here tried to actually start before time. And I find it super interesting because Mondi makes very, very different reporting compared to ordinary European companies. And here you can see that they have both monetized the impacts, both from risks and opportunities. And I would also like to say that opportunity reporting is also rare. And I do understand that it's very difficult for a company to explain about their opportunities because they don't want to show their hand to their competitors. That I do understand, but it's extremely important for the investors. So it's a trade-off to be able to tell about your opportunities. That I understand, but it's quite important at least to have that dialogue within the companies. What should we show? What will we not show? So consider that. And this is a really good and very dense overview that Mondi has created. I'm not saying everything should look like this. I'm just saying this is for inspiration. Next slide. I would also like to stress that if you have done your TCFD in a right way, then you will also notice suddenly that some may be more likely than not. And that means that we very, very fast hit IFRS reporting. And what I've also seen a lot is that companies' front and back half of their reporting is not really coherent. So if you, for instance, have a net zero target in 2030 and you have a fleet of diesel trucks, then it's super difficult not to imagine that that fleet of diesel trucks probably is overstated, or at least it should be impairment tested. So there are some things here to do for the audit committees to ask, have you considered the coherence between the targets, the commitments, the DMA, and your financial reporting? Because they have to be coherent. They are even in the same report now. So it looks really odd if this has not been considered. Next slide. The last thing I will cover is assurance, because assurance will now also be mandatory. At first, it will only be limited assurance, but there is a good chance / risk that it will increase to reasonable assurance. I have here included what is the difference. The difference is that with limited assurance, you could say you have a negative declaration from the auditor, and that means there is nothing that indicates this is not the truth, which is not the same as this is the truth, which you do within reasonable assurance. It will, of course, require different kinds of evidences, different level of control environment, but I would also like to mention to you that it's actually mandatory also for the non-listed companies to report on their control environment for the CSRD reporting. That is super interesting because at least for the non-listed companies, that is not required today, but it will be required for the CSRD reporting in the future. I would also like to mention that I sometimes meet some people who think they can ask the auditors about good advices for how to do this or that. You can't, because they cannot audit what they have provided you of good consultancy. That is not allowed. So you will probably have to consider to have two teams, one who will do all the advising of you, and then one who is auditing you. So consider that very carefully. And then I would like to cut it off with saying, please make fantastic, good internal control framework, because it will make things faster, cheaper, and better. And your dialogue with the auditors will be 100 times easier if you have a really nice audit or insurance framework for this. And it will also be easier for the audit committee to have a dialogue with the organization about the data. Is it useful or is it not? Where do we have some issues that we need to look into? That was it.
Thank you so much, Jane. It was absolutely great. I think the last area you touched on, and I know it's a quick overfly, and we will share your report, of course. I think one of the areas that, not just for sustainability, but actually for financial audits as well, I think many times we as boards expect auditors to give us more advice than they do. Whilst you are here pointing out that they will even be conflicted to do that. So I think that area we need to think differently around, especially around the sustainability area, which is a much more unclear. I mean, we have done financial accounting since 1600. Now this is quite new. So I think we as boards needs to bring things back. Thank you so much for sharing that, Jane, and you will also be back in the panel. Now it's my great joy to introduce David to you. He's a partner at the Serial Law Firm, which is his job on the side, because his main job is probably to produce these fantastic books that he has just released, both in Swedish and English, which I love the title of. It's called Rules of the Game for Sustainable Business, Laws, Contracts, and Morality. And I think that is sometimes something we also as board members, we wait a bit until things are getting into the law, whilst you're also pointing to the ambition here. So warm welcome, David, and over to you. And now we can't hear you, David. See, I think you need to make yourself unmute.
Okay, let's go again. Sorry, thanks Liselott, and hi everyone. Nice to be here on this Friday. So I will only talk briefly on this slide. It's a lot of text here. I will walk you through it. This was my, as you said, Liselott, I wrote this book and I began to sort of try to grasp and also to convey what's really in the CSRD and what is this reporting all about. And eventually I came to the conclusion that what the EU is doing is that they sort of put up what I call an ideal image of what is a sustainable business. And they put up that here, and then they ask the companies, please report how you're doing in relation to this ideal image. Is this sort of a, if you look for the word ideal image in the legal text, you won't find it. This is sort of a legal way of explaining this. And so what you can see here is this wheel, and the reason why it's spinning is because this is a sustainable business. It's not one sort of time. It's not one shot thing. It's going round and round year on year. And I found this. I will talk you briefly, just a few minutes on this subject. What I've seen is that this is a great tool for not least board members to do have some discussions with management among themselves, but also with different departments, etc., to see how are we doing in relation to this board image. Where do we this ideal image? Where do we need to sort of put in extra effort? Where are we behind? Where are we gone quite far, etc. As a tool, and this is my what I try to say to boards and others, that use this legislation. It is confusing if you read it in the wrong way, which many do, I think, but you can also use it to your advantage to really think about how are we going to transform the business. And the first, we start with that thing with the company's purpose and values. And this, I must say, immediately. This is an area which is extremely important, but the EU laws are politely silent. And you're probably all aware of this long ongoing discussion, starting with Milton Friedman and New York Times, 1970, saying that the purpose of business is to generate profit for the shareholders. And then there has been hot debate on that topic. Now, there is no ideal image here. I can say, though, that if you really want to fulfill it, I see it hard to say, well, if you choose profit over sustainability all the time, it will be hard to fulfill that ideal image. But still, my advice would be, because this is an important discussion to have, what is the purpose of our business? Otherwise, you will enter into sort of conflicting goals, etc. if you both claim that and I think this is one of the reasons Jane said, well, these companies saying that, well, we have a climate change policy, etc., but doesn't show up in the strategy. That one of the reasons is that they have not taken this discussion. Are we willing to take cost for this or not? But in the next section, the business model and strategy, there is definitely an ideal image, which I have condensed into one sentence. Make positive contribution and do not do significant harm. And those are, positive contribution is not sort of really a word, but that's sort of the opportunity side of things. Also that Jane mentioned, but do no significant harm is definitely a concept in the CSRD, etc. So this is also, I mean, in what ways are you doing positive contribution? Maybe you're an impact company, and that's the whole business idea. Many companies are obviously not the impact companies, but still can do positive contribution. This is not mandatory to do it. It's just that you have to tell, do you have opportunities to do good? Either you that you're also pursuing, or you have opportunities that you're not pursuing. And that's the purpose, of course, of the legislation to also show that. And then not do significant harm to the people environment, which sounds sort of quite obvious, but I mean, this is one of the reasons why we have a climate crisis today, because there is much significant harm being made. And then the next area is organization and governance. And here, the ideal image, so to say, is that, well, the board of advice, or the board, are very knowledgeable in this area, or at least have access to that knowledge, that there is a clear organizational sort of distribution of the responsibilities for dealing with sustainability matters, etc. And so it's very, very well organized. And here's one area, we can talk about that more in the panel discussion later, but here's one area where I think one of the sort of greatest challenges are today. It's an organizational challenge. Just go back one sec to the previous thing with the business model and strategy. I mean, you are supposed to report on how are these ESG sustainability questions actually affecting the business model. How is it built into our model that we maybe generate sustainability challenges, and how will it affect our strategy? So what Jane was talking about earlier, that disconnect between what you say and what you do in the strategy, now you have to be transparent about that. Incentives, it's not very clear. This is one of the vaguest areas, so it's hard to say what is the ideal image, but it's definitely something that you have to report on. And what I mean by incentives is, has the management, maybe the board or others, do they have financial incentives tied to sustainability targets, etc., for the company? And here often many companies become a bit schizophrenic, I might say. You may have a CEO having a bonus tied to CO2 emissions decreases, but at the same time you have a chief procurement officer still having its incentive tied to sort of squeezing the supplier's margin, etc., which will only increase the sustainability problem. So it's important to have that coherent, so to say, the incentive system. And then we have implement sustainability processes and procedures, and this is where, I mean, many sort of start to shut down here, and maybe also from a board perspective say, well, that's sort of for operations in the company. But of course, this is where it all will happen. You can have a great purpose, great model strategy, great organization, etc. But if it is not implemented in the actual day-to-day business, then it won't happen. And you will have to report. It's not called processes and procedures in the legislation, it's called activities, but you will have to and it's will have to report on it. And of course, in the ideal image, you sort of not only have the sort of the previous pieces of the pie covered, but you also the idea is to be able to show that you're actually walking the walk or walking the talk. I think contract is another area, quite vague in the vaguely expressed in the legislation, but it is there. You have to report on how you're dealing with your supply chain fairly, etc. This is a huge subject. I spend a lot of time a lot of space in my book writing about that, because many contracts today actually generate sustainability problems. Many are not aware. And this is perhaps one of the more ignored, but extremely important areas on how contracts are concluded in the supply chain. And you will have to report on this as well. And this, as you can see, the last piece of the pie here is reporting and follow-up. And this is you have to report on your reporting procedures, so to say. And this is one message I would like to say before I quit and we go on to move over to the panel discussion, that many start here, reporting and follow-up. And that's a big challenge. And they begin consultants without really knowing what you're buying. And in these standards, it's 1,378 data points potentially that you will have to report on. And obviously not all will be, no company will be obliged to report on all these data points, but it's easy to drown. And you will drown if you start in the reporting. And this is why I say, well, start with the next one, start with the discussion on purpose, and then walk around and then and find, so to say, what actions and activities do we need to take to transform our business into a more sustainable business, and then you report on it. I can guarantee you that it will become much more sort of a simple exercise and more clarifying and engaging exercise as well. Back to you, Liselott.
Thank you so much, David. I just love this picture, and I love that you actually point to us. In my experience, unfortunately, the majority have already started only in the reporting area.
Yes, I know. This is it was the title of my sort of sustainable experience with sustainability, and that is exactly my experience.
Yeah, and that's also why it's so good that even you, as a lawyer, points us back to, hello boards, we need to start in another area. And to actually avoid the 1,378 points, the guidance needs to come from the board. What's important? I mean, there are things which is absolutely obliged under the law, but the majority is not obliged. The majority has to be guided through the materiality. So thank you so much for sharing that.
If I might add, it's not even though I'm a lawyer, it's because I'm a lawyer. Most of the consultants guiding on the reporting are not lawyers, and I think they go wrong because they read it too,
Yeah, thank you so much for sharing that. I totally agree. Let me now introduce the additional panelists. We have Daniela Matthews, and she is also a lawyer, and she's a former EY partner, but she is here primarily because her main job is to be an NED at Commerzbank, Deutsche Bahn, Jenoptik, and she's also a chair of the Financial Experts Association. She works with and guides a number of boards and actually audit committees, which often end up owning this area very quickly without having the strategy being confirmed through the board. Warm welcome, Daniela.
Thank you. Nice to be here.
Thank you. And Daniela is actually joining us today from Africa, where she's on business. Henrik is also warm welcome. And Henrik is a chair and a NED at the AP4 fund, which is quite known. It's one of the largest funds here in the Nordics. He's a chair and a NED on companies like Nordnet, which is a bank, Alectum Group, Hedvig Insurance. And he also has worked a lot trying to get to grasp with both doing reporting, but primarily getting the board also on board with what we need to do. So warm welcome also to you, Henrik.
Thank you. Thank you.
So I wanted to start with then bring you in, Daniela and Henrik, and the key question is, of course, to start with, what is the challenges that you encounter in your board and board positions, and what do you see that the challenges are right now in this topic? Daniela.
Yeah, maybe I start. And I think you can have a perspective as a normal board member. I'm sitting in supervisory board, but also as an audit committee member. I think the perspective are quite different. If you are looking just from a board member perspective, you say, and I completely agree with what Jane and David said before. So to balance out reporting on the one hand side and the compliance issue, but more focused on the strategy, on the opportunities and the business, I think this is the most important, I think, leak what we are just currently facing. When you ask me as an audit committee member, the answer, it might be a little bit different because the challenges I have to learn, so how the new standards look like. So if we are compliant with the standards, so how is the quality of the data? How reliable is the data? How is our internal control system on the data? And at the end also, and then I'm a board member again, so how good are our non-financial KPIs in respect to the competitors? Because this is a question which we maybe find out when we see the first reportings. So next year we are much more acknowledged on that. So different perspective and challenges.
Thank you so much for sharing that, Daniela. Henrik, where do you find the challenges right now?
I think to start with, I think for the board to think clearly and understand why are we doing this exercise, and understand the purpose, because if you don't understand the full picture, then you will drown in all the details and all the tsunami of all the regulations. So I think that's to build your own universe and your own thinking system, and then applying, as Daniela said, applying your metrics, your targets, your management system around that, and also including that. I think that's a key thing, and it's taking some time for most of the companies, but hopefully we are getting there. But if you don't have that maturity, then you have an issue. I also think that data quality is it's clearly and will be for a while the big challenge, because to validate and understand what quality do we have, and to bring them into our models and to measure things and to understand definitions. I think that's clearly both from a board view to take the right decisions, but also from the audit committees. But then it's all about people in the end of the day. We have a limited experience of doing the sustainability reporting, and as you mentioned, Liselott, about from the Renaissance, the double accounting. You have done that for many years now, but we have limited experience. It's not in the back of the people's thinking. We are a little bit risk averse because we get a lot of regulations. At least in Sweden, we get really afraid because it's so hard, and you can't apply your sound thinking and your assessment on what is the key topics and how to treat them. So you can't navigate in the material. So I think those are a couple of the biggest challenges for each board and company.
Right. And thank you so much for sharing that. Can you continue and talk a bit about how have you gone about then to, I mean, firstly, get your own board on board, if you can share that. How do you do that, Henrik?
So I think what I have been trying to do, because I've got the opportunity in a number of my boards to first of all chairing the audit committee and taking care of the reporting, but also taking the sustainability agenda also to the board and being the link to management. What we have done successfully is to arrange ambition workshops. What is the ambition of our sustainability agenda, and to start with that, and to align management and boards, and also to do the prioritization to get that machine linked to each other. And it's been very useful because to get it linked and to understand how to proceed and how to create value. That's really key. Otherwise, it will just be a reporting exercise when you get all these requirements. So ambition is a key, definitely a key word for me. And also I think the DMA concept as understanding how to link that to strategy is a key thing. And it's all about to future-proof your company. So if you think ahead, if you do your sound future-proofing and the strategies, then sustainability, it's just a new thing. It's just to link it to the rest. But it's a hard exercise mentally to do that, and to avoid the burden on reporting, because the burden of reporting is killing a lot of strategy thinking, I believe.
Thank you so much for that. And unfortunately, a lot of us have kind of already kindly done this the wrong way. We're already into this reporting mesh, and we haven't really brought it back. So if I merge actually two questions here, there's a question in the chat for you, David, and that is, in your experience, how have values been formulated? Is that a task for the directors, or would you kind of integrate that with the bigger organization?
I mean, it's pretty standard, of course, as you all know, to explicate your corporate values, etc. And you're also actually supposed to report on those values. Sorry, under the CSRD. Why I think this is important, that as many conflate purpose with value. And our purpose is to do great things to the world, etc., and or not harm the world. And I think the purpose must be something around sort of how do we create value for our customers, very close to the business idea, so to say. And then values is more on those things. I call this do no significant harm things, and that I think, so it's why I think it's important to make a difference there. And then I think definitely that this is a thing for the board. I get your reflection here, David. It's a heavy task, but I think that at least all those people in this who have the mandate to take decisions which can impact environmental people negatively, they should be, I mean, somehow included, or at least informed. But it will have to start from the tops with the board of directors, and maybe also bring in the owners, of course, depending on what kind of company you are. Because eventually this is very much being more sustainable. It's not only about this positive contribution. It's very much also about stopping to do bad things, or even sort of unintentionally to emit carbon dioxide, or to do things in the supply chain which eventually lead to child labor, etc. And that is a question of value. Now we stop this, and that will mean sometimes that you will have to take the costs. I mean, at least in the beginning, over time, that should be for the benefit. And that's why I think it should definitely start at the board and then trickle down, or do it with management.
Right, thank you. And Jane, what have you seen in this area? And actually, I'm going to integrate the next question again, which actually goes to this thing about integrating the ESG strategy with the business strategy. What are you seeing there, and the board's role?
Well, let's start with the first part. Actually, I've just been in New York for the New York Climate Week. And some of the questions I got from American and Canadian companies were, what if we just report on everything? Then we are clear home, right? Then we are safe, right? And I have to tell them, well, then you explain to all your investors that you do not know what is important for you. You have no idea what the market is for your company. You actually don't know your company. Is that something you would like to show to investors? I don't think so. So what is much more important is that it is narrowed down but deep. So you understand why is it that these topics are super important for our company and for the stakeholders looking at our company. And that, I think, is one of the most important messages, that if you stretch it out too wide, then it will appear unfocused, and that doesn't work either. Then you ask what companies do. I can see, at least from the reporting, that there are many different strategies, but I think many do what we just talked about. They start with the legislation that, oh, now we are to report. So they run after that, and that is what they do. And to me, it's okay for now, but they will probably have to go down and then redo some things afterwards. But I think many companies are there right now that they probably just have to look at, okay, what is it we actually have to do? And then they might adjust it. That is not ideal, not in any way, but that is what many companies do.
And thank you for sharing that. If I take that link into back to, and Danielle, I can ask you now, in what way do you think that the reporting is actually informing the board and teaching the board to understand the impact and the integration?
Yeah, I think the reporting is informing the board, but my hope would be that the board is informed already and before I get the report. So, and that's the reason why I personally in the boards, especially in the audit committees, but also in the whole supervisory board, we are quite deep to learn more about the company within the double material, the DMA, as you say, Jane. So that means, so we are quite familiar with the DMA, and we learn what the management, what is important and it's material for the management. We reflect that with the strategy and with the non-financial KPIs, which we also incentive via remuneration. And for me, this is a masterpiece, honestly, when it comes to strategy and reporting on the sustainability side. So to understand the DMA. Yeah.
And I'd be super curious how many has even in a proper way discussed DMA on the board level, which would be an interesting, but we're actually going to ask people, maybe not exactly that, but we are going to ask a bit about what the current dilemma seem to be. So I have just launched a poll. Can somebody wave if you see it? Thank you. So try to choose just one. Is it balancing the tech innovation with sustainability right now? Is it managing the ESG regulations and the actual sustainability pressures? Is it to maintain the strategic oversight while still promoting the sustainability, or is it aligning the sustainability requirements with the shareholders' expectations in a way that also kind of Jane talked about now lately? So let's see where you find the dilemmas and the challenges. And I'll hold on for another 5 seconds before you have had to vote to get into the voting here.
I can't find the button to raise my hand, but eventually I have a comment. Just
go ahead.
No, but let's wait for the results here. I'm just saying, bring me in when you want.
Yeah. So now I'm sharing the results. Can you see it? Somebody wave. Yeah, interesting. So now I'll ask the panel here to comment on the where you think it goes back to what we talked about, that it's likely probably different, but what is your reaction to where people find the challenge right now? And do you want to start, David?
Yeah, sure. I'm obviously not surprised by this managing ESG regulations, sustainability pressures. And as I said, I think, in my view, I mean, I'm not saying it's simple. It is a lot, but I see also that it's being made more complicated than it actually is or could be. So it's also interesting with aligning sustainability with shareholder expectation, and maybe that is sort of what I was alluding to, that this discussion about okay, we want to be sustainable, but what will happen to the return of investment or to the profit levels, etc. And to have those discussions is extremely important, of course, to align and to communicate with the shareholders there, because otherwise, if you don't take that discussion, it will come up eventually and create problems. So those were some of my reflections.
Thank you. Jane, please.
Yeah, but this is probably also, especially the investor part. If you have no dialogue with your investors, which would be odd, but if you don't have it, for instance, on your DMA, they are very important stakeholder, and you will have to have that dialogue with them. What do they expect? Then it will be odd. So the companies will have to consider perhaps more widely who are our stakeholders than what they potentially did traditionally with ordinary sustainability reporting. It is not the same. It is really not.
Right. Thank you. Henrik, what's your reaction?
I think I concur with David and Jane. And I think the interesting thing is to create the value for the investors, obviously, and sitting in the board of the AP4, the pension fund. The purpose of that is to create return on investment in parallel with sustainability, and the rules and the targets are quite clear, and that's and we believe that if the all the Paris agreements and the Paris targets on climate, if they are delivered, then there will be return on investment in green investments and elsewhere as well. So you can combine them, but that it's a tough start for that because it's a little bit slow.
Right. And Daniela, what's your perspective?
I'm pretty much agree what was said earlier. Just maybe one point which I would like to add is the technology and sustainability. That it's not such a head here on the curve is, I think we are not on that stage already that we see the benefits of technology and sustainability, but also the risk. So technology and especially AI is not only benefiting to sustainability, it's also a risk when I'm looking about of energy, what we maybe need in that respect. So I think that is worth to have a deeper look in that. So what are the benefits and the risk of the combination of these two trends?
Thank you so much. And David?
Yeah, I finally realized how to raise my hands. So it was time since I had a Zoom meeting. No, I think going back to this, what I think Jane said, it's important to have this discussion with the shareholders. And I think sometimes, I don't know what the rest of the audience think here, but there is a naivety or sort of, many are in denial and say, well, over time there is no conflict between sustainability and profit and or the return on investment, etc. And of course, and I think, why not say as it is? Well, there are great opportunities and great sort of ways to provide value to customers. And of course, if you reduce your resource consumption, you can lower your cost levels, etc. But there are definitely areas where there will be a conflict.
Yeah.
I mean, it is what it is. But I see that many sort of try to skip, don't want to see that, and always it's a time of it. But over time, but we're living in this quarterly economy, so time is, and if everything was fine and dandy over time, it wouldn't be in a problem from the first place. So I think that's important to have an open and candid discussion about that. And
yes.
If I might add, what I was going to say earlier is also going back to Jane's comment from the Climate Week and companies saying we're reporting everything. That would be, in my view, that would be illegal, actually. That would be in breach of, unless all your subject topics are material.
I
It's
totally
not a
agree.
choice.
Yeah.
Yeah,
But
it's
I totally
it-
agree. But in theory, they could have a DMA process where everything is material, which is
Yeah.
yes.
Yeah, for maybe for a bank, a large bank, you know, providing
not
finance.
not
sort
even
of
not even that, because some things are more important.
Yeah, of
than
course, yeah.
others.
But I think that's important because many, and
Yeah.
I know you agree, Jane, that many seem to think that the DMA, well, it's you know, choose what you think yourselves are the most important, the most topics in your area. Well, that's not the case. This is sort of a legal assessment. You sort of must provide correct information what really are, and I see many sort of they go wrong here and choose too many or too few because they think it's a sort of a discretionary decision, which it isn't.
Thank you so much. Now we will let everybody have a chance to discuss this. So we're going to place you into breakout rooms. Unfortunately, we are running out of time, so I will just quickly wrap up. And the first thing I just want to say is the discussion continues. Actually on November 5, we were supposed to be having a really interesting discussion on embedding sustainability and discussing how IKEA has worked with it from the board and into the operations. That has now been moved most likely to the 13th of November instead. So keep into that. On the 5th, however, there will be a really interesting global webinar on the outcomes of the COP that is happening now, the COP16. So do join that one and then come back for the one on the embedding sustainability. And on November 28th, we're going to have an amazing, another actually global webinar together with INSEAD, BCG and Hydrogen Struggles, where they will share some of the outcomes on where we are in terms of strategic governance for a disrupted world. And they have researched this. This is the 3rd year and we're doing it in collaboration. So we'd love for you to come back, and thank you. I'm sure many of you have answered those polls. Do recommend for your colleagues to sign up for the coming cohorts of our board programs. We're starting the board oversight of sustainability with the deadline on November 5. Ship them in, because if we are more that actually understands this, it's going to be an easier way to work. So thank you so much for engaging. Now, my warmest thank you to Jane, to David, to Daniela, and to Henrik. Thank you so much for sharing your deep experiences and generous sharing that helps us all to get a bit more ambition and courage and tools on how to actually work with this. Thank you also to everybody, to the operations committee for helping out, and all of you for engaging, because that's how we learn. That is how we make change happen. Thank you so much to everybody, and warm welcome back soon again. Thank you.